Welcome back to my channel. In this video, we want to look at the preparation of our bank reconciliation statement. And also, we are going to prepare the cash book in terms of the debit side of the cash book and the credit side of the cash book. So remember, the debit side of the cash book represents the cash receipts journal, and the credit side represents the cash payment journal. So we also have to take note that in the bank reconciliation statement, remember, it's a representation of our bank statement. So the side that we have in the cash book is the opposite, will be on the opposite side on the bank statement. So we are saying the debit side of the cash book, which represents the cash receipts journal, should reflect same entries as we are having on the credit side of the bank statement. So we are going to have a scenario like this, whereby our bank statement, the debit side of the bank statement, will be having entries that we or they are on the credit side of the cash book. So that's what we have in terms of what will be on the debit side of the bank statement. So the credit side of the bank statement is it should also be a representation of entries that we see in the cash receipts journal. That is the debit side of the cash book. So basically, we take note of that as we prepare the bank reconciliation statement. So according to our question, we are going to information below appeared in the books of Narcissus traders. First point, make the supplementary entries in the cash book on 30 September 2016. Cross off and balance the cash book on 30. So we have to balance. You have to balance the cash book. That is at the end of the period. Second point now reads prepare the bank reconciliation statement on 30 September 2016. So basically, this is information given. Then furthermore, we are given information whereby we enter the cash book had a debit balance of 80,000 rands on 1 September 2016. So this is going to be our take note of that. And then secondly, we are given that in 2016 revealed the following differences. So 2.1, the balance of 145,200. So very important to take note of the opening balances. So we have been told about the opening debit. So this is going to be our balance BD in the cash book. Then, in terms of the bank reconciliation statement, we take the bank statement balance that we are given as a credit balance. So we can take note of that. It's a credit balance of 145,200 rand. So basically, that's what we have. So I'm going down to 2.11. So you just need to go through each and every information before you start to answer the question. And then our question is 31 marks. Very important for you to take note. So we are going to start by putting our opening balances. So if you go to our other section, you're going to see that you have got the debit side. And also we also have the credit side. So we take note of that. And then in terms of our bank reconciliation, we also have our bank reconciliation statement. So we can start by putting the opening balance that we are given as per our cash book. It's a debit balance. So we go to the debit side. So if we go to the debit side, that's where we're going to put our opening balance. So we are having our opening balance is 80,000 is represented. So on the documents, we are going to just write our base. And then our day, we have got 30. So we can try to refer back in terms of the day that we are having as our opening balance according to information given. So this balance is 1 September. So we can adjust our date to 1 September. So here we are having 1. So for details, it's going to be our balance BD. So we take note of the amount that we have in terms of our opening balance. We are given it as 80,000. Which is going to be our amount, which we are going to put in the column for our bank is 80,000. And remember, we also have to put the amount in the column for amount under sundry accounts. So it also has to come in. And then from there, we can now be able to check in terms of the opening balance that we have according to the bank reconciliation statement, which we are given 2.1, which is the bank statement from Capital Bank. Capital Bank showed the credit balance of 145,200. So we go to our bank reconciliation and we see that this is going to be our opening balance as our balance. And we are told that we can take note of the side that we have our opening balance, that is going to be a credit balance. So we put it on the credit side. So its credit balance as per our bank statement. The amount that we have is 145,200. Then from there, we can now proceed to see the transactions that we have after that. That is from our information 2.2. So you see that one 2.2. It is the following checks have not yet been presented for payment, which means these checks were, when they are being referred to as not been presented, it means they are appearing in the cash book, obviously on the credit side of the cash book. So we need to put them in the bank reconciliation statement on the debit side. So they are going to be outstanding checks. So if you go there, and we know that just after our opening balance, we are supposed to have the adjustment for outstanding deposit. So we can just write credit outstanding deposit, which is supposed to come in, and just leave it blank as we reach where we put an outstanding deposit, and then we put the amount. So after outstanding deposits, we are now going to our transaction that we've identified there, whereby it's payment. So we're going to list the two checks and we put them on the debit side of our bank reconciliation statement. So remember, they are already appearing on the credit side of the cash book. So in the bank statement, they should appear on the debit side. So come here and we become now outstanding check. And you'll see that we have got check number. The first one is check number 05, 90,000 rands. Next one is check number 06, which 36,600. So moving on to the next item, which is going to be our 2.3, which is a check number 43 with the value of 8,800 rands, was sent to Telkom as payment of our account. It got lost in post and must be cancelled. A new check will be posted on the 2nd of November 2016. So very simple it is. We see that this was a check that was issued, and whenever we issue a check, we record in the cash book on the credit side of the cash book. So it means that this check is already appearing on the credit side of the cash book. So by canceling it, it means we have to enter on the debit side and the same amount to cancel it. So 8,800 should go to the debit side of the cash book. And obviously, we see that this is a payment to Telkom, so it's a telephone payment. So this is what and we see that this transaction is not going to affect our bank reconciliation because it never reached the bank, and it was not processed, so we are not going to adjust anything, but we are only just going to remove this check in the cash book. So we go to the debit side. So we go to our debit side and we take note that this was for Telkom. So we go for details, we're just going to say Telkom. Then in brackets, we indicate that it's a cancelled check. Then we take note of the amount. See that it's 8,800. Obviously, we are going to have about 8,800. So we just take notes as 8,800. So here we go 8,800. Remember, this is telephone. Uh, this telecom payment that has been done is for telephone. So we check if the telephone qualifies in the column for sales, data, and we see that it's not qualifying in the columns for our sales and data. So if it doesn't qualify, we have to put it under this column for the columns that we have for sundry accounts. So we are saying the amount is 8,800. The amount that we have is 8,800. And on details, we said this is the payment to telecom, which is for telephone. So we write the specification, but we have, which is telephone. So this is what we have on that part. And then we move on to the next transaction that we are using, which is say 2.4, which is saying a check to the value of 44,000 rands withdrawn by Narcis out of their current account appears on the business and bank statement. So we see that on the bank statement, there's 44,000 rands check, which is not supposed to be there. And it was withdrawn. And when money is withdrawn, obviously it should appear on the debit side of the bank statement. So basically, what we are saying is this adjustment is affecting our bank statement. So you can just indicate as our bank statement. It's adjusting our bank statement. So what we're going to do is this. So it's on the debit side of the bank statement, but it's not supposed to be there, as we are being told that it was withdrawn by Narcis being the owner out of their current account. So it was the personal account of Narcis, but it appeared on the business bank statement, which means we have to remove it from the business bank statement, and it has to appear on the private account of Narcis. So basically, this is what we have. So since we're having on the debit side of the bank statement, by removing it, we are going to the credit side of the bank statement. So we come here. So the description, we are going to credit a bank error. So basically, this is what we have, which is credit bank error of 44,000. So I'm going to go to the next transaction that we have, which is on 2.5. It reads the Capitec Bank had debited the current account of Narcis with the following amounts. So we're given the cost of the checkbook, we're given service, we've got interest on overdraft. So if you check there from this, these are all bank charges. So let's say here we have got bank charges. But interest on overdrafts, we are supposed to represent it separately. Interest on overdraft, which is 1,600. So we can just take note of that. So what we are going to do, remember, these are already appearing on the bank statement. So they are not going to affect the bank reconciliation statement, but in the cash book, they are not yet appearing. So the business can only get to know about these bank charges when they get hold of the bank statement. So basically, that's the issue. So we are supposed to update them in the cash book. So if you add 500 plus 300 plus 1,000, you see that the total that you are supposed to get also as we get charges is going to be 1,800. So you can start by entering or get charges, whereby obviously they should be on the credit side. So these are credit sides. You see, our document obviously is bank statement. And on the day is the last day of the month, which is 30. On the payee, if you see, if you refer back, would see that this was paid to Capitec Bank. And, the amount we've calculated the amount is 1,800. And then if we check if these are bank charges and do qualify in the column for purchases, for creditors, and for drawings. See that our bank charges do not qualify. So in that case, we have to put them under the sundry accounts, whereby we are now saying our details. Remember, these are bank charges. We are now writing the specification, which is a bank charges. If I identify the amount is 1,800, Also, you have interest on overdraft. So if you refer back, you see that we've got interest on overdraft of 1,600. So we can also update that one, whereby we are saying this the payee is just still the same bank, which is Capitec. The amount we've identified is 1,600. And again, interest on overdraft does not qualify under purchases, creditors, or trades. So in that case, we transfer it under the subject account section, whereby we are going to indicate it as interest. It's interest on overdraft, and it's 1,600. So basically, that's what we have on that one. And then we go and check in terms of the next entry that we want to make. So if you go down, you see that we have now 2.6, which is saying a credit entry of 39,500 rands was in respect of a deposit that Nancy made directly on their account, but it appeared on the business bank statement. So as we are seeing the description that it appeared on the business bank statement, it means it was not supposed to be there. It was supposed to be on the private bank account. So basically, it means it's not supposed to be there, so we have to remove it. So already, it's a credit entry. So by removing it, we go to the opposite side, which is debit side, and we've identified that this error is affecting our bank statement. So this error is affecting our bank statement, and you go to the debit side to remove the 9,500, which is appearing on the credit side. So we go to the bank, to the bank's reconciliation, and we are saying we are now debiting a bank error. And we have an amount of 10,500. And of course, that's what we have in that one. And then move on to the next one, which is now 2.7. At 2.7, these are the bank statement showing in favor of Cleopatra as payment of the business monthly advertising. The moment you see that it's a debit order, it means it's only appearing on the bank statement, but it's not there in the cash book. So it automatically means that. So a debit order, what is being debited is the bank statement. So obviously in the cash book, it will be on the opposite side, that is the credit side. So basically, it should go to the credit side of our cash book, and we put 11,600. So what we are saying is uh, uh, the business can only get to know about debit orders when they get hold of bank statement. So we have to update it by putting it on the credit side of the cash book. So we go to the credit side of our cash book, and we are saying this is a payment that was supposed to go to. We can just recheck. It's a bank statement. Okay, Patra is the payee. So we come here, it invites the name. The amount we can just try to refer back is 11,600. So we check the reason for the payment. It was for in favor of Cleopatra as a payment of a business monthly advertising. So obviously, this shows that it was for advertisement. So advertisement is the payment. So if you go there, you see that we've got the column for purchases, creditors, and drawings, and there's no advertisement. So in that case, we have to put it under the nominal accounts section. So maybe we can just drop it down a bit because of space. So we're saying it's an advertisement. So this is what we have in terms of our advertisement. And obviously, we now try to check in terms of the next transaction that we have. So moving on, you'd see that from there we go to 2.8. which means that the bank had not yet credited a deposit of 38,000 rands, which was made on 3rd September 2016. 3rd September 2016. So basically, you see that 3rd September is the last day of the month. So obviously, this deposit was not yet captured by the bank, but obviously in the cash book, it's already appearing. So it becomes an outstanding deposit. It's not appearing on the bank as a statement, but it should appear there. So in this case, it means that this is an error that is affecting the bank statement. So remember, we left a space for outstanding deposit. So this is going to be an outstanding deposit. So if you go to the bank reconciliation, we send it outstanding deposit. So that's the outstanding deposit that we have with an amount of 38,000 rands. So we come here, which is supposed to be about 38,000. And then from there, we can move forward in terms of the next, which is now 2.9. The bank statement showed a monthly stock order for 9,000 rands in favor of Chino's boutique. This was to pay the owner's account. So basically, we is the treatment that we did to a debit order. So we are saying debit order and stock orders, they will be appearing on the bank statement, but in the cash book, they have to be updated because the business can only get to know about them when they get out of the bank statement. So basically, we are saying uh, the stock order that we have of 9,000 should be on the credit side. Remember, it's a stop order, it's money that is going out. So it should be on the credit side of the cash book and then the debit side of the bank statement. So we are going to update it by going to the credit side of the cash book, 9,000. So we go to the credit side, this is our credit side, and we say, and we check what was the payment, the payee in terms of the payee. We see that it was in favor of Chino's boutique. So we are having Chino's boutique. Then the amount that we have is 9,000. Then we check the reason for the payment. We see that it was a stop order in favor of Chino's boutique. So this was to pay the owner's account. So we see that this is an account of the owner, and the owner, remember, the owner is doing the business. The transactions of the owner should be separated from the transactions of the business. So since the owners are transactions, we are private transactions, you are supposed to regard them as drawings. So these are drawings. So we are having 9,000 as our drawings. So if you come here, you'd see that we have got a column for drawings that we have. So it means it does qualify to be under drawing. So you have 9,000 here. So if it qualifies to be in one of these three columns, and that is purchases, creditors, or drawings, we are not supposed to post it now under sundry account. So in that case, we can now proceed to the next transaction, which is now on 2.10. Alexander deposited 6,500 rands directly into the current account of the business in payment of his account. So remember, we are saying Alexander deposited as a payment to the business. So obviously, the business is receiving money. So this becomes a debtor or a trade receivable. So we are supposed to go to the debit side as we are receiving money as a business, debit side of the cash book, and put our 6,500. So we go back to our debit side. And we are saying this was from Alexander. The amount is 6,500 here. And we are saying this was here. This person was paid for his account. So we're saying this was a debtor or a trade receivable. So if you come here, you see that we've got a column for debtors control. So it does qualify in one of the columns. So this is what we have. And we can move on to the next one, which is now saying a check of 10,200 rands received from a debtor, Casita, had been dishonored on account of insufficient funds. So basically what happens when a disordered check is it's a check that has been issued by the business. So the moment it's issued by the business, it's recorded on the credit side of the cash, in the hope that it's going to be processed at the bank. And if it's processed at the bank, it's supposed to go to the debit side of the bank statement. But this check is not processed. It was returned due to insufficient funds. So it means we have to remove it in our books. Remember, it's already appearing on the credit side of the cash book. So we have to remove it. By removing it, we go to the debit side of the cash book. And obviously, this is 10,000. We can just check in terms of the type of check that we have requested. It's not issued, but it's received. So, but if it's issued, is the explanation that I gave that we are supposed to do the opposite. But if it's received, it means it's the moment we received it, it appeared on the debit side of the cash book, as we assume that we have received money. So when it was at the bank, it was not processed due to insufficient funds. So we have to remove it. So by removing it, now we go to the opposite side. That is the credit side now. To remove it, credit side of the cash book. So at the bank, it's not going to affect anything because it was not processed. So there's no mistake at the bank. So the bank statement is not going to be affected. So in other words, we are saying the bank reconciliation statement will not be affected by a dishonored check. We can just take note of that. So it only affects the cash book in terms of the debit side and the credit side, or the cash receipts journal and the cash payments journal. So in this case, it was received, so we are supposed to go to the credit side with 10,200, and we see that it was received cash payments, and we are saying and if you refer back, you would see that this was from a data. So on the description, we're going to say data control. That is when we go to the salary account section, but the amount that we have is 10,200. And we see that this is a data control, but we don't have a column for that. So it's supposed to come under the salary. So we are supposed to give a description of data control. And the amount is 10,000, 10,200. So basically, this is what we have on that one. Then moving on, you see that from there, we are being told this becomes the last transaction that we have. So from there, we can now refer back to the instruction of the question, whereby it's saying, make the supplemental entries in the cash book on 3rd September 2016 and close up and balance the cash. So we have to balance the cash book. So what we are going to do is go to the side and add the total, and then you go to the credit side and compare the total, and then you balance. So if you go to the debit side, obviously we are supposed to go. We are supposed to go to under the bank column, whereby we are supposed to add to get the total. And also, we are supposed to add the total that we have under sundry accounts. So if you add the total of the debit, and then also you're supposed to add the total that we have for the credit side. So we also we are going to see that the debit side is going to give us a greater total. That is a total of 95,300. So this total is supposed to come both sides in between the double lines. It's also supposed to be on the yeah, in the double lines on the credit side. But remember, you're supposed to leave a space for our balance CD since we have a smaller total on the credit side. So you can just leave a space. And we are saying the total that we have is 95,300. Uh, on the credit side, we get the balancing figure, which is supposed now to be 61,100. So we are also supposed to go to the certain account section. We can take note that we have, if we add under the certain account section of the credit side, we're going to give a total of 86,300. And of course, this 61,100 should also appear under the certain account section. And we should take note that the description of this also here, it should show that it's a balance CD. So this balance CD should go as a balance BD on the debit side. So here we say it's supposed to come here as our balance BD. We got our balance BD is 61,100. We should be also under the amount column of the something account, 61,100. And remember, we need also the total of here 80,000 minus 80,000, sorry, 80,000 plus 8,800, and we're going to get 88,800. So this is how we balance the debit side and the credit side of our cash book. So from there, we are also supposed to balance our bank reconciliation. So we are going to put our double lines. Obviously, we leave a space for putting our balancing figure. We just leave a space here and then put our double lines. And then we add what we have on the credit side and the debit side, compare which total is greater. You're going to see that the credit side is going to be greater with a total of 227,200, which obviously has to come also on the debit side. On the debit side, you get the balancing figure, which is 61,100. As per cash book, not as per bank statement. Okay, you can take note of that. There has to be a description as per cash book. So remember, if you go to the cash book, you are going to see that we had our balance BD on the debit side. So if our balance BD is on the debit side, it means it's a debit balance in the cash book. So that's the description that we are going to give here as debit balance as per cash book. So we can take note that the closing balance that we have in the bank reconciliation, 61,100, is going to be it should be the same with the closing balance that we got again in the cash book, which we got it again is 61,100. To say we've done our bank reconciliation correctly. So I remember we are saying the cash book is a true reflection of what is on the bank statement. So at the end of the day, we are saying if there are no errors or omissions that transpired during the period, we should have the same balance in the cash book as the same balance that we are having in the bank statement. So whenever there's a difference between the two balances, that's when there's need for us to prepare the bank reconciliation statement so that we can correct errors in terms of arithmetical errors, omissions also can be part of that that needs to be corrected. So basically, we are reconciling the two balances. So this is what we have. So basically, we are saying it's a comparison between the two documents that we have. That is the internal document of the business, which is the cash book, and the external document that is coming from the bank. And we compare the two documents so that they have the same balances at the end of the period. That is the reconciliation process that you will be undertaking. So basically, this is what we have, guys, according to this video. And thank you for listening. Let's not forget to subscribe and share to our channel. Let's stay tuned for more videos to come.